Hey everybody, good to be here today. My name is Brent Moores. I'm sitting in for Mr. Ben Watson today. Today we're doing trading futures. Let's take a look at the markets here. And one quick sec here. I just made a little mistake there, and I had some noise in my ear there. I took care of that. Hey, whether you're here for the first time or a veteran, we're glad you are here. Um, I'm joined by Mr. Mike Fairborn in the chat, helping me out today. He's very familiar with futures trading. So as you have questions, feel free to type those questions in to Mike or myself, and we'll do our best to get those questions answered. Obviously, if you've been awake the last few days, you've seen some volatility in the market. Well, we'll take a look at that here on the charts very shortly. And that's what I want to do. I want to look at potential trading opportunities here. Example trades is basically what we're going to look at. They're not recommendations, and that goes right in line with our disclosures. Futures and futures options trading involves substantial risk and is not suitable for all investors. You do need to be approved for futures tradings, by the way. Futures accounts are not protected by the SIPC. And just be aware of the risk and educate yourself with futures here as we go into this. I'm going to go through individual futures contracts today. Those are not recommendations. They're examples. But futures can be a good way to look at the market as a whole too, especially before the market even opens. If you're watching off hours, futures are a good way to view that. The information for general purposes only. It's not an individual recommendation of any security, strategy, or chart type. The paper money application is for educational purposes only. We'll be using the Thinkorswim desktop software today. And Schwab does not recommend the use of technical analysis as a sole means of investment research. And let's see, for the sake of simplicity, examples in this presentation do not take into consideration commissions and other transaction fees. All investing involves risk, including risk of loss. Stop orders are not guaranteed in execution. Due to exchange rules based on certain conditions at time of activation, the exchange may reject or substitute an exchange designated limit order for the originally triggered market order. Our agenda today, we're going to look at different futures asset classes, look at some futures, look at some examples. Here's some different asset classes that we can look at. And, a lot of ones that we've seen a lot of volatility in that we may look at today are, some of them will be like indices, Dow futures, S&P futures, Russell futures. Crude oil are very liquid futures that we may consider. We may look at some metals. Do I have that on the list here? Gold would be an example of that. Copper would be another example. We could look at things, we could look at almost anything, but we'll probably focus primarily on those because I want to get a good sense for the overall market here on this. So without further ado, let's head on over to the Thinkorswim platform. And this is the ES. You can see that this is a 6-month chart, by the way. And you can see the move yesterday was a tough move in the market. Our trend is down. This is a 20 and 50-day moving average. And if we look shorter term, well, we could see what we're doing intraday here. So let me go to a 1-day, 1-minute chart. And I'm just going to zoom in a little bit on this so you can see this a little bit better. And my first principle I want to talk about today, and that is technical analysis can be applied to both longer term and shorter term. So the things we look at, things like support and resistance, things like trend, using moving averages, you can apply to different time frames. I have a 20 and 50 minute moving average on here. It was days because I had a day chart before. Now I have a minute chart. Each of these candles represents 1 minute of time. So what I can do, let me just zoom in a little bit more. I could potentially do a bearish trade on this if I wanted to continue this trend. And when I'm doing when I'm doing futures, that would consist of shorting shorting that. So we'll look at some examples of that in a minute. But before I do that, let me just go back and let's look at some other indices. So that's the pullback we've seen in that ES. And we can, in fact, we can even measure that if we wanted to. Is that going to, it's going to cut us off here. Hold on one quick sec. Let me just do this and see if we can get a, that's almost 10%. Okay, so that'd be 10% is generally considered correction territory on that. And one thing to just keep in mind is when we talk about a 10% pullback on an index, it does not mean a lot of individual components of that index have actually pulled back a lot more than that. So that's a pretty substantial move. Now, if I go to the NQ, which is the NASDAQ, and I do a similar thing, let's just look at our pullback on the NASDAQ. To right now, we're about 12, 13%, somewhere in that range. And to the bottom, yes, to the bottom, overnight, I think probably we got to 14%. So bigger moves in that NASDAQ. Again, in terms of general trend has been down. In terms of today's action, we can go and we can look at intraday chart. Here's a 5-day, 5-minute chart. You can see that over the last 5 days, this is what we've seen. A little bit of a rebound here, but that rebound is turning over. So things change. These are 5-minute candles we have here, but we're below. What moving average would this be? Well, this is a 20-period moving average with 5-minute candles. So 5 times 20. This would be a 100-minute moving average right now. Okay, this would be a 100-minute moving average. So you can look at that. And so that's the NASDAQ. Let's look at the Russell 2000 / RTX. RTY / RTY is the Russell 2000. Again, 5-day, 5-minute chart trending down. And if I zoom in, pulling back significantly. Nice, the last 5 minutes, looks like we're having a little bit of a bounce there on that. So some comments on shopping, or some things on sale. Yeah, there's some things on sale, so to speak, on the market, but we're going to wait for trading signals for a lot of these in this webcast before we get in. Now, if you were looking for futures symbols, maybe you're newer to futures, just realize on the Thinkorswim platform, we have public watch lists. So you can add a watch list. If you don't have a watch list, go to the plus sign down there and you can add a watch list. There's a list for futures. There's also a list for micro futures. What's the difference? Well, here is let me just give you an example. Here's the S&P 500 future. Okay. And I'm just going to throw a little chart label on here just to try and help us out. Here's our futures label. Every point in this. Right now we're at 56.13, so it's a more expensive thing. So a point isn't that much. We're down $6.50 right now on this. Okay, down $5. Every point there is worth $50. So you can see how quickly this is moving. In the time I've been talking about this, this has moved a couple $100 up and down here on this. So this, for some people, that becomes like too expensive, too much risk for them. And so they want to slow down the movement to make it more practical. So there's what's called micro futures. And those are listed right up here in the micro futures area. And there's a bunch of them, not all, there's more just futures out there than micro futures. But if I do that same list, S&P 500 mini futures, instead of that $50 point value, it's a $5 point value. You see that? It's a $5 point value. So in other words, if we're up $5, it's up 2 now, but it's moving around. If we're up $5, that's about $25 on your account. That's that's a little bit easier on the in terms of the risk level, in terms of the movement, than doing the full-fledged contract. So we may look at some of those micro futures today. And by the way, if you're interested in this chart label, it is in the description of this webcast. It's in the description of the webcast, so you can look there. If you are watching live, what I'll do is I'll post this up, post this in the chat here for those of you, or if you don't already have that futures label. You don't need the futures label. You can always just go to the Analyze tab, and it will give you specifications on the future. And you can see the data right here. There's your multiplier on that. You can see that. You can see the tick value, the minimum tick size on that. Okay, now let's look at some charts. Okay. Here's what I want to do. I want to go over here, and some of these may be more appropriate for more intermediate type charts, intermediate type trends. And in other words, if I'm looking at this, or not even intermediate term trends, but not intraday trends, and you can see the daily data, we're going down here. And so what I'm going to do here is I'm going to go to MNQ, which is the NASDAQ 100 future. It's the micro future for the NASDAQ 100. And let me just put that chart label back on because I took it off here. Our point value is $2 on this. $2 you say isn't much. It's a very expensive future, and therefore, for example, today we're up 42 points. That's pushing $100 there on that. That's a slight little bounce today, but I'm going to go with this continuing trend here on this and look for a trade. Now, one thing you can do is you can say, I don't want to get in right now. I actually want to get in if it goes below where we're at. So because we have a slight gain today, we could, if we wanted to, say, well, I only want to get in if we break below yesterday's low price. Well, yesterday's low price was 19. I'm just going to jot this down so I don't forget it. 19,271. And I'm going to continue. I'm going to put in a trade for this. Let me just adjust this so we can see it a little bit better here. And let's just take a little bit of a longer view on this here. Well, actually, that's good. And what I'm going to do is I'm going to look at this, the move that we've had. We've gone from about 22,200. We're all the way down to 19,500. And I'm not going to expect it's going to go that much in the future, but I'm going to continue to trend this down further. And what I'm going to do is I'm going to take this as a kind of a flag pattern. I'm going to measure that high to low, and then we had a couple day reprieve there, and I'm just going to duplicate that. I'm going to duplicate this drawing. I'm going to pull this over from there to there, and that's going to get me down to right around 1850. So I'm going to go 18,500 as my target. And furthermore, what I'm going to do is I'm going to go above today's high. We're only going to go in if we break below today's low. I'm going to go above today's high as a stop point. So today's high so far is 19,583. So I'm going to say 19,600 as a stop level. Now, just remember, stops are not guaranteed, but this is, we're going to do this and we're going to enter this trade. Now, this is a bearish trade. This is a bearish trade. And therefore, what we're going to do is we're going to short the future. In other words, if you are long, in other words, you're bullish, what you would do is you'd buy a future, you'd go long a future. In this case, though, we're planning on this going down because that's what the general trend has been. That's where the momentum has been. And so we are going to sell the future. All right, so let's do that. Let's put in a trade here to get in if the future goes below right here. That's going to be our entry. I just want you to visually look at this. That's our entry. Here's our target. I'll put a little T for target. I'll put an E for entry. And our stop was going to be 19,600, which is right. This isn't going to be perfect, but it's going to be somewhere in there. It's going to be stop. And one thing to consider is, what is the distance from your entry right there to our target? And what is because we're going to consider that our potential reward. And what is the distance between our entry and our stop? That's from there, here to there. And we're going to consider that as our potential risk. Now, is that our true risk? No, that is not our theoretical risk, because we're not guaranteed to be stopped out right here. But that's what our plan is on this particular trade. So what I'm going to do is I'm going to go to the trade tab. Okay. Here we are. And I'm not doing options today. We're going to look at our futures contracts, and you can see them listed right up here. And you can see the higher volume. So this is a higher volume. This is a short-term trade. We're planning, this may be a day trade, maybe a couple days in here, but I'm going to right-click on this. I'm going to sell custom. I'm not buying custom because it's a bearish trade. I'm going to sell custom with a stop. Now, let me get rid of this left-hand column. My goal, so I can make this a little bit bigger for you. Remember, I'm not getting in right where we're currently at. We're only going to get in if it goes down. I wrote down that number. We're getting in if it goes down to 19,271. Because if I just enter this right here, it would probably fill right away. So what I'm going to do is I'm going to make it a stop order. This is a stop order. Often we think of stop orders to kind of protect ourselves on the trade. This is a stop order to ensure we're only getting in if the stock or if the future goes below a certain price. And what I'm going to say is that price is 19,271. Yes, George said OCO. Yes, I'm going to do an OCO, and you're absolutely right on that, George. Let me do this again because I did that wrong. So thank you, George. I forgot we were doing an OCO order. So what I'm going to do is I'm going to right-click on this, and I'm going to buy custom. I'm going to sell custom with an OCO bracket. We'll talk about what that is in just one sec. So thank you for reminding me there, George. We're going buy stop or sell stop, and we said 19,271. 19,271 is going to be our entry. And I could do this as a good till canceled, but really, you know what? With the volatility we have in the market, I'm just going to leave that as a day order, because that's as long as I want to be in this. Now, we have a target price, which is going to be a limit price, and then we're going to have a buy stop, which is going to be if things go against us. Okay. My target price, which was my limit price, I made that good till canceled, and my stop, my buy stop to get out, good till canceled, because I want those exits to go on beyond today. So what was my target price? My target price was 18,500. Okay. So here we go. We're going to put in 18,500. That's my target. I'm going to put in my stop to get out. It's a buy stop at 19,600. 19,600. Okay, there we go. Now, just a little recap here. Here's my potential entry right here. I want the bigger gap between here and, here's my potential entry. I want the bigger gap between here and here than between here and here to try and keep my ratio positive there. I want my reward to risk ratio be positive. A lot of traders will say we like a reward to risk 2 to 1. We're not going to insist on that in this class, but that's kind of what we'd like here on this. And let me go. And what is it? Well, what's the difference between 19,600 and 19,271? That's 329. That's our risk. What's our reward? Entry price 19,271 to 18,500. That's 771. 771. And so that's our potential reward. Remember, stops aren't guaranteed, so that's not an absolute reward to risk ratio, but that's our goal there. Okay, now this is a first triggers OCO order here. This only comes about if this first trade fills. Okay, this first trade fills. First of all, it's only a day order. Secondly, it's a stop order that we're only going to get in if the future goes down to 19,271. So if that doesn't come about, the whole first part of this triggers the rest of the order isn't even going to come about. Okay, that'll just cancel out. Now, let's say it does come about. What's this OCO part? The OCO part means once we've entered this short futures trade, if we go down to and we get stopped out, it's going to cancel our limit order. Or if we go to exit, or if we go to our limit order and exit, it's going to cancel out our stop. So that's what that is. It's a first triggers OCO order. Whichever side gets filled first will cancel the other side. Okay? All right, so let me go out here and let me get rid of my drawing tool. There we go. And then what you're going to do is you're going to confirm and send. You're going to, and this is just obviously an example trade here. Just make sure you read through this and make sure it makes sense for you. And then if you want to place it, you go and you actually send that order. That is an example trade, assuming with the forecast that this future is going to continue down. All right, no guarantees on that. So Ricebird said, hey, is this MNQ future? This is a micro NASDAQ future. Is it similar to trading an index like the SPX? Well, there are similarities, certainly, but there are differences. Futures have risks that don't exist in just trading say an option on an index. Remember, you're trading an index. When Ricebird, keep in mind, when we're talking about an index, okay, like the SPX, you cannot just trade an index. There's no shares of an index to trade, all right? What some people do is they'll trade options on an index. So they'll go, well, I'll trade options on the SPX. And that's fair. Now, options have their own risks, so you need to be aware of that. We're not going to go into that today. Then what you can do is you can also trade you could trade instead, say, the ES, an index, okay? And that's trading futures on that. But there's a difference between trading futures and trading options. There's different risks involved. Keep in mind, there is substantial leverage on these futures contracts. Now, what about the ES as compared to the MNQ, which is what we have been looking at? The the answer is, well, the MNQ, the micro contracts are going to tend to move less than the full-fledged deal there. But the ES and the NQ we saw earlier, look, you saw the amount of the pullback that we had on the NQ versus the ES to start. The NQ tends to move more rapidly than the ES. It's not a guarantee for the future, but that is what it tends to do. Okay. High speed, low drag said, does the time and force on the trade have to be the same on the, so the answer is not on the entry and the exits, but on my OCO exit orders, they do need to be the same. Okay, so in other words, when we got in, we did a day order to enter the trade. Okay, we did a day order into the trade, and then we had that OCO order to exit, and we did GTC on both of those. Those two have to be the same if you have that on your exit orders. But your entry order, which was a day order, they do not have to be the same. All right, let's look at some other examples here. Okay, let's go. That was the micro future here. Let's do this. Let's look at MHG. So HG is the copper future. This is the micro copper future. When the market sells off, which we have all seen, these major indexes, the Dow, the NASDAQ, the Russell 2000, the S&P 500, kind of are all going down, but that's not true for everything. Okay, that's true for oil as well. That's been going down, but it's not true for everything. Some things like gold or other metals, this is the micro copper future, actually, as you can see, have been doing fairly well. What's our technical analysis here on this? Well, our technical analysis is, what's the trend? My trend is up. We have lows, higher lows, recent bounce right here. That is an upward trend, folks. And for a lot of technicians, that's kind of the first thing we look for in a trend. That's what a lot of technicians look for, is that trend. Furthermore, they like to see support levels, resistance levels. Maybe this is a resistance level. You could say, well, we've had kind of a roughly equal high. That's true. But that usually doesn't as big a concern for me as long as I'm getting these lows higher. Okay, when I say it's not as big a concern, what I mean is for a lot of technical traders, that's not as big a concern, because a past high, if you think about a stock or a future that's going up, or a stock that's going up, it doesn't matter. To reach new highs, you have to break new highs. And by definition, an upward trend is a series of higher highs. Therefore, to get a series of higher highs, you have to break previous highs. So a previous high isn't the end of the world. Furthermore, if you look at this and you say, well, look, these are pretty similar height though. This is forming what I think a lot of traders would consider an ascending triangle pattern, which is generally deemed to be more of a bullish pattern. And we're bouncing off the low on that. And we do have a nice bounce here on this. Okay, so if you want to do a bullish trade, you can do a similar thing here. You don't have to always do a order where you do this OCO. But in this class, we're going to encourage you here to use stop orders for these sample trades that we're doing. So I am going to put a stop order in, but maybe I don't put a target price in here. I'm going to let this continue to trend up. So how can I do that? Well, it's going to be a fairly similar process here. I'm going to go to the Trade tab. I'm going to go to MHG, and I'm going to double check, by the way, my point value. Remember that NASDAQ had a point value of $2. $2. This point value is $2,500. Little difference there. Yeah, a little difference. Why is that a little difference? Well, remember the NASDAQ had a value of around, the index value was close to 20,000. This is around 474, okay? So that's why you can have a 2,500 point value. For this to go up to 474 all the way up to 5, for example, that's about 0.26 of a dollar. 0.26 times my point value of 2,500 is about, that would be from where we're currently at to right here is about a $650 move there. Okay, that's about a 600. So don't be, usually, I guess I won't say always, but usually the higher the point value, if you get this high point value here, it's going to correspond with a lower price there. Okay, I can't guarantee that always, but generally you're going to see that. So do the math on what you think is reasonable. Also, probably more importantly, even in terms of a stop. If we say we're going to put a stop below our recent bounce, so we'll say our stop is going to be around 0.46. What's the difference between my entry price? Now, I don't know exactly where I'm getting in, but 475, we'll say, minus 4.6. That's about 0.15 of a point, 0.15. So I just subtracted the current price from where my potential stop is, and that gave me 0.15 of a point. Well, our point value is 2,500. So if I take that times 2,500, I come up with about a $375 potential loss there. Okay, so you need to be fine with that, and also you need to realize that, look, if this gaps down, we're going to lose more than where our stop value is here. But if I want to do this trade, what I can do is, let me get out of here and we'll go to our trade tab. Here's our MHG. I'm going to go to the one that actually has the more this is a trade we're planning on staying in a little bit longer, first of all, and I have more volume here on this, and I'm going to go with that right now. So I'm going to right click on this, and I'm going to, what am I going to do? Am I going to buy or sell? I'm going to buy because I'm bullish on this. We're going to buy because our example trade is a bullish trade. I'm going to buy custom. I'm not going to do an OCO bracket this time because I'm not even going to put in that target price. I'm going to keep an eye on it. At some point we'll get out, but we're going to look at that. We're going to throw in a stop here on this. And there we go. Okay. Now, where was our stop? Well, I forgot. I should have written that down here. We said our stop was going to be about 460. Okay. 460 is going to be our stop. So I'm going to put in 460 here, 4.60. Stop. My stop is going to be good till canceled. This, I'm just going to get in at the current price. Now, if I submit this, it's possible I may not fill because, hey, look, the current price is right about here, but this is a limit order. A limit order indicates that that's the most I'm willing to pay for this. Well, this is moving right now. This is stuck because it's locked. You see that lock? That means that this isn't going to move right now. And so if I click on this and untoggle that, number one, I got to be a little careful because this just moved. Okay, we want it at 4.6. And that's my natural price. There's my mid price. And it's, you see these markets move pretty quickly here. So I'm going to do that. And then you can confirm and send, and you can send that. Or if you really want to get in, you may even tweak this up just a little bit more just to try and ensure. You see, this is moving so fast. If I want to ensure I'm going to get in, I may do something like that and then click on confirm and send. That's the thing. If you get kind of slow to do this, especially as fast as these futures market move, you may miss the trade on that. Confirm and send, and then you would send that. Okay. All right. So let's look at some others. We have time for maybe another. Now, what I want to do is realize we just did two trades. We did I wanted to give you kind of variety. We did a bullish trade on the micro copper futures. We did a bearish trade on the micro NASDAQ futures. And then you may also, consider looking at some intraday trades as well. We can do that. I'm going to go to a 1-day, 1-minute chart. And for intraday trades, often we will look at trend. We will look at support and resistance. And there's other technical indicators you may use. One approach on intraday trades that is very common, it's not a recommendation, but it's very common to use, is pivot points. So I'm going to add on pivot points here. And essentially what pivot points do is they give you potential support and resistance levels there. Okay. Kay Brown said, can you add a stop later? Yeah, you sure can. Just like on a stock order, to this extent, it's the same. You can always add a stop after the trade. Okay. And so our markets are moving. Let's go and let's just look at some of these. Here's our Dow future. You can see what are we doing? I mean, volatility is crazy right now, and it's going down rapidly. And given what we've seen lately, it wouldn't surprise me the least to see it start to go up rapidly at some point there. Okay. So there's the Dow futures. Let me go. I'm just going to go to our full futures list here, and I just want to look at some of these here. I'm going to sort this, and we're going to look at description. There's your Bitcoin futures. Okay, Bitcoin futures. If you're interested in crypto, this is certainly one approach here. I'm not going to do a trade on that right now, but oil. Well, here's Brent oil. You could do crude oil as well. West Texas crude. You can go CL. Either of these are viable contracts. Here's your CL. What's my trend? Well, my trend's been up. Okay. Let me zoom in here a little bit. Here's my CL future. Now, what's it going to look like if I use that micro CL? I'm just going to throw a little M in front of that CL there. Looks pretty similar, doesn't it? Okay. In fact, it looks almost exactly the same because it is the same, except the point value is going to be 1/10 of that. Okay. Okay. So we're seeing movement here on this. Let's keep on looking at some others here. Let's look at, hold on. Here we did, here's Canadian dollar futures. Let's zoom in. Big move, okay? Big move on Canadian dollar futures. Let me zoom in and just realize, there's currency, there's extra complexity when you're trading currency futures, okay? And we can see this, and in the chat, Thay is helping us out with some updated news here on potential 50% tariffs on Canadian steel and aluminum. That certainly appears to be maybe the case here as to what we have here. Now, remember, we said these are potential support and resistance levels. We had a rapid move down, a bounce possibly up here. So what I'm going to say here is this. We're going to go short term. This is going to be just we're using this is a 1-day, 1-minute chart. In fact, I've zoomed in beyond the 1 day. We're just looking at the last 10 minutes. You can see this recently has been going up. So I'm going to, for our purposes here, I'm going to call this a bullish trade. We had the initial reaction down, but it seems to be, is that an overreaction? I don't know. Potential target up here, potential stop down there. And so what I'm going to do here is I'm going to look to buy. Stop around 0.6903. That's going to be our stop. We're looking to go long. Target 0.6936. Okay. Now, remember what we did before? We said if we're here, our target's here, our stop is here, what's our reward to risk ratio? Here's the reward. It's a bigger gap than the difference between our entry price and our stop. Stops aren't guaranteed, of course, but we'd still like to see that in there. So let's finish up with this as a potential trade here. Let me get rid of this as an example trade. Now, let's consider the risk though, because again, point value 100,000. That's a lot. If we were to go and let's consider as if we went down and got stopped out, I'm going to take the difference between the current price, 0.69125 minus stop 0.69035. Okay, I have 0.00225. I'm going to multiply that by the 100,000. Yeah, it's 100,000. And I've got about $225 there. Okay. Now, this kind of illustrates some of the dangers of futures, though. Let's say we were hanging on to this earlier and we had a stop about here. Were we going to get stopped out right here? Likely not. There's a good chance that we would not get stopped out right here. I don't know. I can't say for sure. So just be careful. Just be careful on that. Furthermore, so if we were going to do that trade, I want to show you to do that trade. Now, this is starting to reverse itself. So, you know what? Game time decision, maybe that's not a trade we would consider doing because this upward momentum seems to be shifting down. So you would possibly consider walking away from that if the initial circumstances of why you were looking to trade it were to change. So what I'm going to do here, though, is I just want to kind of show you on this. I can go to trade, and I can right-click on this. I can buy custom with OCO bracket. And how would we do this trade? Remember, here's our limit price. That is our target price. That's where we want it to go to. Okay? And got to look at the right thing here. And our limit price is 0.69. Now, notice this. It actually just automatically puts it up a whole point. Well, that's massively too large here compared to what we wanted. 0.69360. Our stop price, 0.69. It's not negative. 0.6903. That's going to be good till canceled. This is going to be good till canceled. And then if we wanted to place that, we could. But let's take an updated look at that chart here. Now it's bouncing. So I'm going to stick with that. Looks like we get a little bounce here. So let's consider this as a trade. Again, there's no guarantee on this. This could change here. Confirm and send. And see, this would only get in if we're at this price or less. And then you could send that order. Okay. So if you wanted to. Of course, these are just example trades. Let me just kind of recap what we've done here as I wrap up. Remember, with futures markets, you can go long, you can go short. You can go longer term, you can go shorter term. We did both today. We did long bullish trade on the micro copper futures. We did short trade, a bearish trade on NASDAQ futures. Those were both, we're going to stick with it a little bit longer. This was a potential intraday trade on the Canadian dollar. We went long on this, but we had a relatively tight stop, which will probably help us out in case it turns against there. Okay. And there you go. And just remember, double check your risk on that. Make sure you use your point value and do the math on it so you know what you're risking. All right, everybody, thank you for joining me today. And we will see you all. Well, Ben should be back next week, but Ben should be back same time next week. And thanks, Mike, for helping me out in the chat. Everybody have a great rest of the day. Bye-bye.